Afternoon. Campbell McCrary, and I'm a Vice President of Capital Markets at Amvest Capital here in New York. Welcome to the Amvest Capital Inc. live webinar with Maple Gold Mines Ltd. Maple trades on the TSX Venture as MGM, Mike Golf Mike, and on the OTCQB as MGMLF, Mike Golf Mike, Lima Foxtrot. Hope you'll enjoy today's program. We'll also be available in replay mode. Do feel free to chat in your questions in the question pane of the GoToWebinar control panel, or simply email them in, and we'll try and ask the questions in real time or after the webinar. Amvest Capital is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Please note, this call is for informational purposes only. We're very pleased today to have with us several members from Maple, but I'm just going to start with a brief introduction of Matthew Horner, President and CEO of Maple. If you want to share your screen and turn on your webcam, it would be fantastic. Matt joined Maple Gold in 2017 after over a decade at the Ivanhoe Group of companies, with Robert Friedland, of course. During his time at Ivanhoe, he structured strategic alliances, negotiated project financing for development projects, and directly negotiated equity capital raises totaling more than $450 million. This experience undoubtedly played a factor in Maple Gold's recently announced strategic partnership with Agnico Eagle Mines. So Matthew, thank you for participating in our webinar today, and looking forward to hearing more about Maple Gold and what led a leading gold producer like Agnico Eagle to get involved in your story. With that, you've got the floor.
Okay, thank you, Campbell, and thank you to Amvest for hosting us today.
That's great. What we'll be talking about today, Maple Gold Mines, is quite a unique story, I think, today in the gold space. We've come a long way since I first joined, but more importantly, since the project was first uncovered back in 1976, and we'll touch upon that shortly. I'm going to bring up the presentation now. Where's the presentation?
Oh, we can see it, so it's up.
Okay, I need to go through the pages if I could. Great. Okay. So here's the cautionary notes. The 4 points we'll talk about today. I'll introduce some members of my team in a minute to go through some various points. But Maple Gold Mines, for those who have not been following us today, is a premier Quebec Abitibi late-stage gold exploration company. We formed, as you mentioned, Campbell, an extremely strong partnership with one of the top gold producers in Quebec, Canada, and actually globally in Agnico Eagle. Fred Speidel, our VP Exploration, who's on the line with us today, will walk the audience through today some of our exploration targets, what we're planning to do to increase the size of our existing resources, which is one of the largest in Quebec. And really all of our targets sit, as we say, in the shadow of giants. We're in and around some of the largest gold producing current mines anywhere, and previous mines as well. And then lastly, we'll talk about our fully funded structure that enables us to grow all of our existing projects and also seek very high growth opportunities. But why are we big fans of Quebec? Well, it is the second largest Canadian gold producing province at 35% of total production last year. That's significant. It's always ranked in the top 10. I'd put it in the top 2 globally for mining jurisdictions, given all of the support they provide, the province provides to junior mining exploration companies and producing mining companies. There's significant advantages given we have a low cost of exploration, relatively speaking. There's infrastructure all around our projects, as we'll get into in a minute. The other thing that's important for all the viewers is that this Abitibi Greenstone Gold Belt has been such a prolific gold region that it has produced over 200 million ounces to date. It's a lot of ounces if you do the math on that. The government institutions are there for us. Most notably, there's a tax incentive that equates to 37 cents for every dollar we put in the ground. So if we put $1 million in the ground, we get $370,000 back, for example. That's a huge benefit that encourages exploration for companies like us to go farther and go and explore as much as possible. Some of the other points as to why we're excited about Quebec and excited about where we exist. I mean, in real estate and mining, it's all about location. In the Abitibi, we're surrounded with the #1 and #2 largest gold mines in Canada in Detour Lake, owned by Kirkland Lake, and Canadian Malartic, obviously owned by Agnico and Yamana jointly. Both of those projects produced in 2019 over 600,000 ounces each, kind of neck and neck as to who's the bigger fish in that pond. Casa Berardi is also located not too far from us, of course, because we're on the Greenstone Belt. They produced in last year 134,000 ounces. Another point that's interesting to the audience who's looking at what the future may hold is that this Greenstone Belt in the Abitibi is enjoyed $10 billion of M&A activity since 2013. So where are we? We're, as you can see from the map here, we're located right off the 109 highway. We drive past, if you fly from, for example, if you fly to Val d'Or from Toronto, it's about an hour flight. And from there you can drive in any form of motorized vehicle or horse and buggy, if you like, to our mine site. It's widely accessible. You drive through a nice town in Amos, nice restaurants, nice people, incredible group of people that can work on all the mine sites for us. The skilled worker and skilled labor is pretty much everywhere there, and also Matagami, which is just to the northeast of us. As you'll note, the Casa Berardi mine is operating just to the west. Veza was a past producer, and we'll talk about why that's interesting in a minute. And Eagle Telbel, most importantly for us, was the past producing Agnico project that they contributed to form our outstanding 50-50 joint venture. Point of note is the Douay property map below shows that is quite large. With the Jutel acquisition or combination, we now have over 400 square kilometers of ground. It's only, our resource is only covering about 4% of it. I think that's one of the reasons why Agnico was attracted to our company and is because of our land pack, which is so large, and the opportunities to not only expand our resource but to find additional deposits nearby was quite high. A bit of history about where this project came from. We were not the first to discover it. In fact, when I was running around on my tricycle at age 5, somebody up in Quebec put the first holes in the ground, which makes me the ripe old age of 49. It went through the hands of a few owners. The bolt tonnage potential was discovered in 2004, where Vior, one of the previous owners, outlined what is known as the Porphy Zone. That's not, and Fred will talk about in a minute what that means. And then I was invited to take a look at running the company in early part of 2017. Now, there's a photograph here nearby of right down near the bottom of Dr. David Broughton. David Broughton was somebody with whom I worked at Ivanhoe Mines, and quite a uniquely successful exploration geologist. If you win the Thayer Lindsay Award, it's like winning one of the Academy Awards because it's voted on by your peers. He won this for discovery in the DRC at Kamoa in the Ivanhoe list of assets. He and I also worked on another project in the Ivanhoe camp of our list of portfolio companies called Plat Reef. This is a project that really was in many ways similar to what Douay looked like to us anyway, back when I first took a look. That is because Plat Reef was all but forgotten. People had drilled it, not fully understood it, or thought they had fully understood it. And the company was running out of money. And at that time, I spoke to my former boss and mentor, Robert Friedland, and said, you know, I think the Japanese consortium could be interested in this if we find a new way of looking at exploration. And at that, Robert said, okay, we brought in the Japanese consortium. And really the key was to give David, in that instance, of course, Fred Speidel in the Maple Gold instance, give David the horsepower he needed to go forward and really understand and see if there was something deeper at Plat Reef, which is exactly what happened. And the Japanese came in at first for $10 million and then followed that investment about 9 or 10 months later for $280 million at 6 times the valuation. So this was something that attracted David and I to this project. I asked him in 2017 in April what he thought about Douay. Now, David actually started his career hunting for gold in Quebec in the 90s. He actually wrote one of the technical reports for Jutel back then for Agnico. So he knows a lot about the area. After we'd spent a few days over coffee here in Vancouver, looking over the materials, we came to the conclusion that the existing resource, the land package, the fact that there was a considerable upside to the project, all meant that it was worthwhile getting involved with, and he agreed to come on the technical committee to help us think through it. So that was the first reason why I got involved, was really because of Dr. Broughton and his support on the rocks and his understanding as to what this could become, and how it reminded us a lot of something we worked on before and what became ultimately will become a very successful polymetallic platinum palladium project in South Africa. Now, once we got the green light there on that front, David and I went about looking for candidates to run the program, and we interviewed a number of people. We came up with Mr. Speidel, Dr. Speidel, who's on the phone or on the screen with us today. Now I'll introduce him properly in a minute. We also started relogging some historical core. We started upgrading a lot of the systems, and really, you know, we came from Ivanhoe, and so we started thinking about Maple Gold of really a larger company and a larger company format. And to build a larger company, you need to do a lot of different things. You need to get more conservative and realistic with everything across the boards, and we did that. We brought in RPA to do a more conservative resource estimate that was done previously, and the idea was ultimately to attract the interest of some strategic groups. And obviously, that's what happened, because when they look at the estimates, they want to know how aggressive you're being with the inputs, which leads them to get more comfortable with everything else you're working on. So we did a lot of work, as we say, in the hardware and the software of the company, and that's kind of this history of the project and how we ultimately got involved. Campbell, you were nice enough to talk about some of the things I've done in the past. Greg Orr is the CFO and former audit partner with Deloitte, so he watches our treasury. Fred Speidel was 30 years plus working in exploration with Minova in met mining, First Quantum, Antofagasta. But Fred is also uniquely qualified in that he came from Quebec. He speaks French, English, English, German, and Spanish. And I really love the fact that Fred runs this project really like a Swiss watch, I like to say. It's always on time. It's well under budget on normal years. That's just something that we couldn't account for. I can't say enough wonderful things about how superbly Fred runs this program. And I really like the fact that not only did he come from Quebec, so he understands the geology there, and we'll talk about that in a moment, but he also learned a lot about geology in South America and looking at all different rock formats and geology formats. So he brings that wealth of information and knowledge and that experience to the table, which I think has been a huge benefit to us, because he's able to get he's gotten his head around this project, what it can become. And we're seeing just from the last drill program that was earlier this year, he hit 11 out of 14 of higher than average grade mineralization, which is quite unique for any exploration company, and we're very excited that happened. Jonas Lang, Executive Vice President, he's been very successful in his career, so leading up to Maple Gold, and with Maple Gold, he was key in bringing about a lot of the strategic partner discussions, including Agnico, Shirley Anthony, corporate communications, key hire for us as we were anticipating the closing of the Agnico transaction in October. When we signed the first binding term sheet, we brought Shirley on to start getting the word out and spreading the news about what Maple Gold is. Our board, I think, I would say, is first class. We have Maurice Tagami, who's a VP Mining Operations for Wheaton Precious Metals. He runs all their operations. He brings an operational mindset to the point where down the road, when we start thinking about our operations, he's going to be a huge benefit. Gerald Rivrin is a geologist, worked with Fred in the past at IMET, and quite an accomplished geologist in his own right. Sean and Michelle are capital markets savvy directors. Michelle just came on recently, and Sean was the first actually person to introduce me and bring me into this idea back almost 4 years ago. I spoke about David Broughton. Timo Juristo is formerly Gold Corp Placer Dome. Matthew Lexier, Ivanhoe Mines, did a lot of IPOs and capital markets work for Ivanhoe for many years, 25 years. And Agizio, who I'll ask to speak in momentarily, was former executive vice chairman of Ivanhoe Mines and vice chairman and co-head of BMO's global metals and mining group for, I think, 28 years. Extensive track record, a wide range of metals and mining companies. But, you know, before I jump into the next segment, I'd love to have Agizio, because you're on the line, just say a few words about your involvement, how you got involved, and why you're with us as a strategic advisor, if you would.
Sure, Matthew, thank you very much. And thank you everyone for joining us this afternoon, Eastern time. I think the reason I like this, I liked it early on when Matthew first brought it to me when I was still at BMO in 2017. You know, I look at this in a couple of ways. One, it's strategic. If you look at the Abitibi, it's the gift that keeps on giving. You know, with over 230 million ounces produced historically, it's really one of the most prolific gold belts in the world. It used to be #1 in North America before Carlin passed it in the mid 2000s. So I like the area, I like the jurisdiction, and as many of you know that I have a technical expertise, all these deposits lie on these sort of fault structures that go through the greenstone belts, either east-west, or some of them are cross-cut, and pretty much every major deposit is on these structures. If you take a look at the property that Maple has assembled, it's a long property along the this part of the Larder Lake structure, and it's really quite a great piece of ground. It already has a resource on it that Maple has been working on. So when I first found out that Agnico was interested, you know, it didn't surprise me, because it's really the Park Avenue of gold mining is where we sit. And the other geological thing I like is we've got several different types of targets, including some of my favorites, which are BMS deposits as well. We've got some potential there. We've got Fred will get into this a bit more. And then I like the people, right? David, I knew David for a long time. He's an advisor. I've known Matthew for a long time through Ivanhoe. So I just like the people. I like the situation, and I thought it was a really good place for me to get involved in something grassroots, which is my first love. So that's why I'm on board. Thanks, Matthew.
Thanks, Agizio. Just 1 second.
We lost your presentation.
Okay, sorry. So just moving on.
Matthew, we lost the presentation. I think we lost the presentation.
Down there. Okay, how's that?
Yep, good.
Okay, thanks. So let's talk just about the partnership. I think thank you, Gizio, for that. I think it explains a lot of the reasons why Agnico did get involved, and it bears mentioning that it was not a quick trade. We had hosted Agnico to site at least 4 or 5 times. They had gone through all of the core and looked carefully at our project. This is going back over 2 years ago, starting 2 years ago. Looked at our project, looked at our team, looked at the history, etc. And I think that's what, through all that diligence, was how they finally came to the decision this summer to get involved. But it's really get down to what Gigi just said perfectly. It's the Park Avenue of gold production, and let's talk about that partnership. It's a 50-50 joint venture that has both of us contributing to our own projects to the joint venture. We are contributing Douay, and they contributing Jutel. They made a strategic investment when we were trading in the high teens of 24 cents. That was a premium of about 40%. They'd already had a 4.4% stake as of the financing in August. As I said, we both contributed both of our projects. They're also funding a minimum of $80 million over the first 4 years of the joint venture. After that, we have to spend 50-50 with them. And there are also other opportunities to explore with them outside the joint venture as we move along. We're jointly funding also some DMS type projects to the western end of our project in the first year, and both companies get a 2% upfront NSR for the contribution of their projects, which comes with a $40 million buyout, which is essentially our market cap when we signed the deal. We importantly get the expertise of Agnico contributed to the joint venture, which is quite a valuable contribution by them. They have essentially an engineering firm within their company of over 100 individuals, and quite frankly, they know more about the engineering, exploration, development in the Abitibi in Quebec than anyone. And also down the road, when we look at getting into the project development phase, we get to lean on them for third-party project financing assistance. And here's the map that shows the Jutel contribution to the south, and here's the area we're contributing. The VMS type deposits are to the western side, as you can see, and it's quite a large land package. The Jutel project background, something else I think that is quite exciting about this joint venture is the Jutel project. I love both of what are now our children in this joint venture, Douay and Jutel. We want to help them both grow up and to be contributing members of society, if you will. Think about just this. They stopped production when gold was $360 per ounce. They produced for almost 19 years, over 1 million ounces, and the average grades were 6.5 grams per ton. So if you run the numbers on what it would have taken them to be profitable, given those inputs, you can understand, I think, that they would have left a lot of material behind. We know there is a resource there that is it is a historic resource. It is out of date, and we have to update that. And we're right now going through the process of digitizing all of the historic records so that we can put a nice package together for the market to see in the coming months. The funding happens over 4 years, 44855. As I said, this is the minimum spend. We can speed that up, and that would be a good thing, actually. That means we're going into some great targets that will require more funding, and we can allow them to spend that $18 million quicker than 4 years if we plan for success, and if we do what we think we're going to do, and start hitting a lot of these things out of the park. So the impact for the Maple Gold shareholder, I think is pretty self-evident. The validation from them is huge. It signals to the market that they, who know more than anyone about gold production in the province, think this will become something quite large. I think it's no secret that they get involved in projects that have the potential of 5 million ounces or more. The asset diversification, I think, is incredibly important for us. That we have a past producer, and there's no place better to build a new mine than in the shadow of a headframe. We have enhanced exploration expertise, as I mentioned, and a robust balance sheet, which has also been even increased recently with the deal with BMO, which we're quite excited about, which puts us on an even greater, stronger footing. So I'm going to switch over now to Fred to talk about what we're drilling now, what we're going to be drilling next year, and then we'll circle back at the end to answer, I think, questions that Campbell may have from the audience.
Yeah, so this slide here is just to show you what the distribution of the current resources are. So on the right-hand side, what we see is a 6 by 2 kilometer resource area, blue being inferred resource and green being the higher category indicated resource. And the center of the system is in what's called the Porphy Zone, which was discovered around 2004, as Matthew mentioned before. So basically the characteristics of the different styles of mineralization that we have on the property have to do with how far away you are from that center and then what rock types you're in. So for instance, the main zone, the central zone, and the northern tip of the northwest, the north zone, they're all within sedimentary rocks, which are quite different from the basaltic and cyanitic rocks that are found in the rest of the deposit. In terms of resources, we have two types. One is pit constrained. Pit constrained indicated, that's the green shading on the right-hand side, 0.4 million ounces at 1.52 grams per ton. Inferred resource, just over 2 million ounces at just under 1 gram per ton. We also have, for the first time, a property-wide underground mineral resource. It's really an initial resource, 300,000 ounces, average grade 1.75. We have to take.
Looks green. No.
We have Matt, why don't you take over and Fred will log out and log back in and see if it reset.
No problem. So the Douay resources and mineralized zones he was discussing about just now include this conceptual pit put together by RPA. It is just under 3 million ounces, 2.77 million ounces, and inferred in M&I category. Some of the 2020 step out drill program successes highlighted in this screen. As I mentioned earlier, the Porphy Zone cross section here shows that we actually hit outside the conceptual pit walls. Some of our biggest best hits ever were found in this, and 11 out of the 14 holes intersected higher than deposit average grade gold mineralization, which is quite unique for any program. I'm not sure if we can hear Fred yet or not.
Well, I guess we can try again. Can you hear me?
All right, we're back.
Sorry about that, guys. Technology is great when it works. Okay, so here what we're seeing is just some of the successes from the winter 2020 drill program before it was cut short by COVID. So the top figure shows a Porphy Zone cross section. You may recall I was talking about the center of the system previously within the bulk mineable zone. Previous slide, please. And so what we're seeing here is very much the center of the system, and as a result of that, you have a lot of pink rock. The pink rock is kind of like a granite. We call it syenite. It's an intrusive rock, and there's also adjacent basalt. So you can see that the black bars, which show the distribution of gold within the system, they're fairly continuous from the base of Overburden right down to the base of the pit. Note two holes that I'd like to point out in particular. One historical hole towards the base of the pit that got 1.2 grams per ton gold over 163 meters. Probably the longest continuous mineralized gold intercept on the property. And then there's another hole that we drilled in 2020. Therefore, it has this gold label. That's 1.9 grams per ton over 17 meters. Both that intersection actually is found just to the north and outside, or below, if you wish, the base of the 2019 conceptual pit. So we can see that the north side of the pit, or if you wish, the base of the pit, the limits of the mineralization there is poorly constrained. And the hole that I just mentioned to you a moment ago, 1.9 over 17 meters, actually ended in mineralization. So that hole needs to be deepened. We know that there's additional mineralization well to the north, i.e. well below that pit. Another important point to look at here is the distribution of the indicated resources, and that's highlighted by the yellow ellipse, as well as the yellow blocks within it. Indicated requires a condition for a resource to be called indicated, means that the drill holes that define it have to be less than 50 meters apart. Now, before we drilled our 2020 holes, all of these intercepts here, or most of them, were more than 50 meters apart. Therefore, even though we can see that the mineralization is quite continuous from base of pit to base of base of overburden, it did not form part of the indicated category because of the drill hole spacing. So as we close that spacing, one could very well imagine a cascading effect whereby the existing yellow indicated resource will expand upwards and downwards. Another important point here is that we have higher than deposit average grade near surface, and that's why we call this area one of our 3 or 4 starter pit search space. Starter pits, higher grade starter pits being important from the point of view of economics in terms of recovering your initial investment over a shorter period of time. The lower section shows another area in the northwest corner. And what we were doing here is testing for the western continuity of mineralization, following up on a historical hole that gave 3.15 grams per ton gold over 8.9 meters, very close to surface, right at the base of Overburden. We got 4.2 grams per ton gold over 3.4 meters, followed by 1.15 grams per ton gold over 20 meters. So a thicker intercept than we had in the historical hole. And basically the nearest drill hole to the west is about 200 meters away. The nearest drill hole, or pointing out another gap if you wish, to the east of the historical hole is 150 meters. And there's additional gaps to the north and to the south. So we expect to drill 5 or 6 additional holes in this area in the winter of 2021. With the objective of defining what the volume potential, or in other words, what the contained ounces might be in this area, where we also have near surface higher than deposit average grade. So this could conceptually become another starter pit search space within the western half of the deposit area. Next slide, please. So beyond the local implication for this northwest zone, again, you can see where the northwest zone fits in the overall scheme of things. This entire deposit from end to end is 6 kilometers long, as we mentioned before. So the northwest zone, the central zone, and the main zone on the northern flank of the deposit, they're all hosted in sedimentary rocks. And that's quite different from the types of rocks that we see further to the south. You can also see that there has not been a lot of drilling along this contact. So that's what all these brown ellipses represent. So essentially, these brown ellipses require additional drilling. And so, for instance, the 2 ellipses we have north of the central zone label, the lowermost ellipse has to do with this major shear zone and rock type change that we see there. The upper ellipse has to do with the fact that probably the richest top of bedrock drill hole that was drilled on the property was drilled in the central zone. Top of bedrock just means that you're going through the glacial cover. You're taking a sample of the basal till in the gravels, if you wish, and then you go a couple meters into the underlying bedrock and you do geochemistry on both sample media. So in terms of gold grains in the till, what we got in the central zone was 256 grains, of which 240 were delicate. And that's significant because anything above 10 grains is something that you would follow up on. So that means that that northern ellipse that we just saw a moment ago represents a significant target. And because it's a big area, we'll be doing geophysics over that area before we do any drilling. And that geophysics is actually slated to begin within the line cutting, and subsequently the geophysics will be beginning in the next few days. Next slide, please. So just looking at the targets on the property scale, this outline here includes both Douay and the Jutel property contributed by Agnico Eagle. Let's just go from west to east. At the very westernmost end, we have these red blobs. They actually, again, correspond to top of bedrock drilling, where we got up to 35 gold grains until, again, many delicate and multiple drill holes giving anomalies in the same area. So you can see this fainter white and red line, if you wish, the Estratus horizon, the Newiska horizon. Those are known interpreted eastern continuity of known massive sulfide horizons, such as the Estradas deposit, which is polymetallic and gold rich. So these red blobs have not had follow-up, neither geophysical nor drilling, and so that's pending. And then further to the east, we have the black blobs, and they basically represent copper zinc targets that were defined in summer 2018 mapping. Again, there has not been any follow-up there, no geophysics, no further drilling. So what we're going to do shortly, probably at the beginning of 2021, is an airborne electromagnetic and magnetic survey, which will allow us to not only map the rock types better, but will also allow us to define any accumulations of sulfide that exist over this western half of the property for subsequent detailing and drilling. Moving over now to the Jutel property, we see the Eagletail Bell deposits that Matthew's mentioned previously. 3 deposits that are lined up along the Harricana deformation zone. The northwestmost structure is shallow, the southeastmost structure is deeper, so there's a plunge there, so there's an increase in depth as we go down to the southeast. And that's important because the down plunge or depth extension of those 3 deposits, which really are a single system, has not been adequately drill tested. The deepest hole went to about 1,300 meters. Vertical is still in very good mineralization, and there's no drilling below that. And again, as I mentioned before, by analogy with other systems in the Abitibi, we would expect that that system would carry on for some significant greater depths. So essentially here as well because of elevated cutoffs used in the past because of the low gold price, and given the current gold price, one would expect there to be a significant amount of mineralization that's potentially economic, that's still remaining closer to surface around these deposits. So beyond that, on the eastern half of the property where it says JDZ West Target, that's an area that has been drilled in 2011, 2012. Not a lot of drill holes. There have been some anomalies that have not been followed up. So again, what we'll be doing there is a geophysical survey over top of that, map out the distribution of sulfides being mineral that's associated with gold mineralization, and then subsequently drill the best geophysical anomalies in that area. Now, if you follow that JDZ West Target further to the east, that structure comes on to the Douay property, and in that particular area, there's actually not a single historical drill hole. In other words, this structural target had not been identified in the past. Now, if we also look at the northeast IP target, what we're seeing here is simplified geology with the outline of the 2019 RPA conceptual pits with the northeast IP survey superimposed on top. So you can see that basically we have 2 targets, the northeast IP target, which is about 2 kilometers long, and the south IP target, which is roughly the same length, but is very much open to the east and open to the west, so that requires additional geophysical work. We elected to concentrate our efforts onto the northeast IP target initially, and that's because the entire target there has only a single historical hole at the very southwest edge. And as you can see in the section below, that single historical hole is very shallow, only 146 meters long, and just barely tested the top of the chargeability anomaly. So we have completed 2 holes already, very recently in the current campaign. One hole was drilled to 468 meters, the other hole was drilled to 408 meters. So basically the historical hole, the log indicates that the rocks that were cut were very similar to the rocks that exist at Veza, which is essentially the model that we use. Veza is located about 12 kilometers further to the east and is characterized by relatively high grade, just under 6 grams per ton, but a pretty small footprint. It's only about 400 meters long. So basically, if you think about it, 400 meters long, 2 to 30 meters wide, there's space for a number of those, of that scale of lens within the northeast IP target. So we've just recently received permits for the 4 northeastmost holes. We expect to be mobilizing a second drill into that area to do some additional follow-up drilling there, and hope to be able to drill perhaps 2 additional holes before Christmas in that area just to be able to better assess what the significance of that target is. Of course, we did the visual results that we have so far are quite consistent with what the historical hole showed in the sense that there is a large sulfide system there, and we know that it has several anomalous elements that are often associated with gold. We don't have the gold assays complete for this area yet. Next slide, we have a look at the P8 target. Similar concept. Essentially, we were chasing a combined geophysical and artificial intelligence target, and we ended up defining the P8 target. P8 target consists, as you can see in the lower figure, of coincident chargeability, that's the new information, and the underlying conductivity target, that's the purples and the pinks. And we also have 2 historical holes that test the very upper part of the chargeability anomaly. The historical holes extend to about 190 meters vertical. The chargeability anomaly is open at 450 meters depth, i.e. twice the thickness of this of the original drill holes. So the current hole that we're on should be complete in the next few days, and we will be mobilizing to one of the SP holes. There's 3 of them here. They have not been drilled yet, SP001, 002, and 003. There's also a few holes further to the east that have given us base metal anomalies with anomalous gold as well. So this is a very large target, and we're looking forward to getting some initial drilling into it this season. This just shows you what the distribution of holes is so far. Northeast IP target, the 2 holes to the east, and we'll be drilling a few more holes there. Previous slide, please. And so we've drilled another couple of holes within the Porphy Zone. We drilled a hole to the west of the main zone where there's a 600 to 800 meter gap with no drilling. And the other 2 blue spots will be completed shortly and will be on the P8 target, as I mentioned previously. Next slide, please. This is the recently completed artificial intelligence prospectivity map. And you can see that the resource area, which is outlined in black here, coincides quite well, as you would expect, with high prospectivity areas. After all, those are the points that are used for training purposes, if you wish, for the algorithm. And what I've highlighted here are a series of target areas in yellow. And basically where there's a series of yellow anomalies, if you wish, that are coincident in any particular area, they've been highlighted as white ellipses. So basically what we're in the process of doing now is having a look at these white ellipses and assessing and ranking them in terms of significance based on what the source database is for these things. The southeast corner, for instance, appears to be a magnetic feature. At the northern end, at the top end of the figure, we have a series of linear elements that are both east-west and northeast-southwest. That may be significant because we already know that these orientations of structures do control mineralization within the resource area. So that'll generate a series of additional targets that we'll be able to test going forward. Q4 2020, well, we have our new discovery targets from the IP surveys and the artificial intelligence study. We have delivered a strategic partnership. We are now probably about 2,900 meters into the current drill program, which will probably end up being more like 3,400 just because of the additional holes we'll be adding in the northeast IP target. Jutel digitization, that information is all hard copy, so that's in progress, so we can then generate a 3D model for targeting purposes. We have already discussed winter drill targets with Agnico. We're currently in the process of permitting those sites, and we're looking at releasing initial fall drilling results as soon as we have them all. The labs have been quite slow. There's a lot of backup in terms of samples, so we basically have to be patient until we have all the information. First half of 2021, definitive JV agreement with Agnico Eagle. We'll have a continuous flow of information from the fall drill program results from January onward. We'll start at 10 to 11,000 winter drilling camping at Douay, and that's going to include discovery drilling, step-out drilling, as well as infill drilling in the resource area. We say here that we will commence geophysical program. We've actually started that already. Line cutting is now in progress, and we hope to be able to have a few, a part of the first grid completed before Christmas. New 3D digital model for Jutel, that's one of the deliverables from the compilation that's ongoing. And as I mentioned before, we will be doing an airborne EM and MAG survey over top of the western half of the property. Second half of 2021, continue releasing winter drill program assay results, updating the 3D model. That's something we do on a continuous basis. Resource optimization, part of that can be in-house. Updated resource estimate for Douay, complete IP work, new targets, assess VTEM and MAG results for the western half, new targets, and start a fall drilling program at Douay and or Jutel to follow up on the best targets. So we have a lot of targets to follow up. And as we've done in the past, it's always going to be a mix of resource area drilling as well as exploration and discovery drilling.
Thank you very much, Fred. I'm sure at the end, if we have questions for you, we can get to them. So this is the final slide before we get to the questions. Campbell, if there are any, this just goes over our cap table, gives the audience a sense as to where we are today. Shares outstanding, cash position, etc. So I think we're in a great position, made even stronger by this recent deal with BMO. What's important for any growing company is that we increase the number and size of the institutional support we have. And in doing something like this, where we enhanced and grew our shareholder base, which makes it even a more interesting and perspective and fun story to be part of as a retail investor, because the stronger we are, the safer, relatively speaking, anyone's investment is. So I'll leave you with this, 4 things to take away. We're in a great jurisdiction. We have an existing resource. The management team comes from large mining companies. And of course, now we're fully funded to advance all of our initiatives and then some. Thank you all for your attention. Campbell, if you have any questions?
Yeah, so, you know, we got a lot of questions during and before today's great event about the $10 million bot financing with BMO, a range of concerns and thoughts, and you know, sure everyone there verbatim, it's all going to get to management, but this, if you want to kind of dig into why, you know, the justification and just, you know, the concerns that people have of dilution and you know, interpretations of perhaps previous statements and all that. This is, I guess, if you can elaborate and set the record as how you see it.
Sure, happy to. Happy to. We're extremely excited about this. You know, we and if you go back in time, you look at our company 9 months ago, and if you were to tell people we were on the brink of signing something significant with a large strategic financing partner that would fund our project, add a project, give us capital to move our company forward, and on top of that, complete a deal with BMO on a bought deal basis with no warrants at 36 cents. I think most people, well, first of all, if you tried to host this webinar in March, nobody would have attended when we were down in a lower share price, but it would be kind of aspirational at best. We've accomplished all those things, and you know, I've said all along and that, you know, we've been working we've been playing the long game. 3 years ago, we set about a plan to upgrade everything in the system, the personnel, software, the hardware, as I said. We've been doing everything to get the attention of a strategic partner, which we now have. That was my mandate coming into this based on my experience at Ivanhoe Mines. And you know, if a number of people may have not believed that we actually could pull these things off, we now have, based on our hard work and Fred's work and the whole team's work. So, you know, we have an absolute game plan for the financing we just raised. You know, I was just on a long call, as I do every day on this. You know, I just happen to have it here. It's about a 100-page draft of the Agnico Eagle Mines Maple Gold joint venture agreement. And in there are a lot of financing requirements going forward. You don't ever want to get into a marriage with somebody who's 20 times your size if you don't have a very extremely strong balance sheet. So that is one of the things. I think some of the targets that we're going after that Fred's discussed will require follow-up drilling, additional capital, and that's one of the reasons why we decided to take BMO's generous offer for us. It doesn't come with any warrants. It's very favorable, relatively speaking, to us. And we've been looking at some other projects and ideas for a while now that up until this point, you know, given that we're very conservative, we didn't feel that we had a strong enough balance sheet to take advantage of. So yeah, for all those reasons, and I think that if you just trust that, given our discipline to date, we'll continue to deliver on a very disciplined approach, that there's a reason for what we just did, and that reason will be made clear in the not too distant future.
Okay. Digging in a little bit. This is an interesting statement. Time and again, it's apparent that the labs are the bottleneck. There's a premium on results these days because of this. Any thoughts on moving this step forward? The faster you get assay results, the faster you move forward. So any just sort of thoughts on that process, and everyone's in the same boat.
I'll say something a little bit tongue in cheek. I mean, with COVID in place, you can't take out the lab rats for a beer and bribe them, which is what it would take to move things faster. You just get in the queue and you do what you can to keep pressure on. I think Fred calls almost every day to see where we are. But that's my take. I mean, Fred, you may have a different take, or Agizio.
I normally budget about a month to get assay results in. I think right now it's probably prudent to budget more like 2 months. And once you receive the assays, you still have to assess the results, do the quality control, compile, interpret before you can put them out. So I think basically we're going to have to be a bit more patient. But I think it's fairly interesting, say, and people can interpret as they wish, but it's fairly interesting that based on what we've seen so far for instance, the Northeast IP target, we have elected to bring in a second drill and drill a few more holes in that area. So I think we'll have something interesting to put out at some point in the near future on that area.
Okay, thank you. And then there was a question of grain parts per billion. I've never heard grain, but if you can kind of tell us about what all that means.
We're talking about the top of bedrock drilling. So basically, again, what we do with that is we're actually sampling the dirt, if you wish, which is glacially transported just above the bedrock. And so if you have a gold source, what the glaciers do is they abrade that gold source and transport gold grains down ice along with the sediments. So when you're doing your top of bedrock drilling, you take a sample of the basal till just above the rock, and that, if you're in a gold train in an area that has gold, you will get grains in there. So basically, you can drill pretty well anywhere in the Abitibi, and typically you'll get between 2 to 5 gold grains. Not too exciting, but if you have 10 or more, that's considered anomalous. So if you have, like at the western end, we have 35 gold grains, that's anomalous. If you have 260, that's really anomalous. If the gold grains are delicate, what that means is that the glacial transport distance has been relatively small, so only 500 meters. So you're not chasing the source 10 kilometers away, you're actually chasing the source very close, like on your property. So that second brown ellipse that we had in our presentation there near the central zone, that's about 500 meters away and has not a single drill hole. Essentially what we're saying, therefore, is that these gold grains in till, they have not been followed up. So that opens up a whole new target area for us that is quite large with no drilling.
How do you rank your regional early exploration targets in terms of priority? What characteristics and data help you to decide?
So I think in general, the scientific logic behind these things is that you need to have at least 2 layers of information to provide you with a high priority target. So you can have a very nice geophysical anomaly, but if it isn't supported by geology or not supported by geochem, it's kind of difficult to convince yourself that that's a really high priority target. And so one of the reasons why the Northeast IP target for us ranked pretty high there is because we had geological control from the historical drill hole. We had geochemical control because of the fact that there was anomalous gold top to bottom in that short historical hole. And of course, we're in an area of interest in terms of geophysics, and an area of interest from a conceptual perspective with regard to being in the same geological and structural horizon as the Vesa deposit. And of course, we're chasing higher than deposit average grade targets because that would have a significant economic impact on the Douay resource.
What does your 2019 resource geometry look like? What are its depths and dip? You mentioned you sampled higher grades in the infill program after 2019 estimate. How about the thickness of those latest intercepts?
Yeah, I think one of the interesting things when I joined this company was, the overall resource is about 1 gram per ton. And so we're thinking about bulk mining type of deposit. But the important point to realize that each one of the zones, and there's like 8 or 9 of them, each one of these zones has higher grade areas. And some of the areas, notably the ones that are a bit more distal, like Douay West, actually, the average grade there is closer to 2 grams. 531 zone at the far east portion of the deposit, which is geologically very similar to Douay, so they're at opposite ends of the deposit, that also has higher than deposit average grades. And the thicknesses of these intercepts, well, one of the examples I can give is 2019, we decided to drill a single hole into the 531 zone, again at the far southeast end of the system, just because we're doing a step out to test the depth continuity of a known historical intercept. Well, we got 2 intercepts. They were roughly 50 meters long, and each one was about 2.5 grams long. So if you combine that in terms of accumulation of gold, those 2 intercepts are among the top 3 ever on the property, so 40 years. And we're significantly higher than the discovery hole for that particular zone. So there can be some significant thicknesses of pretty good grades in the system.
Since the 2019 resource estimate, how does your step out drilling progress? Which zones you guys are focusing on, and how far away are they from the current resource?
I think it's important to think about what Agnico's objectives may be in terms of size potential. Now, they're not rigid in that regard, but for sure, one of the reasons that they decided to do a deal with us is because they can actually see the potential for something significantly larger than 3 million ounces. And that's not just wishful thinking. They have their own experience with discovery at Malartic, again, which is geologically very similar. They discovered the East Goldie zone, which is 2.8 million ounces, and they discovered that 80 years after the initial mining started at Malartic. So I think they can imagine that sort of thing on our property as well. And the fact that we have these Vesa type targets, and we have also Eagle Telbel type targets that are ballpark 6 grams per ton, that's pretty exciting for them and for us too, of course. So there's going to be a certain focus on discovery type drilling, and an example of that would be the Northeast IP zone, the P8 zone that we're currently doing initial drilling on. But there's also additional targets further afield, like we're going to be doing about 100 line kilometers of IP over 3 large grid areas, both on Douay and on Jutel, and all of that will no doubt generate additional targets. So I think we can look forward to a mix of further afield discovery targets, step out drilling, as well as infill drilling going forward.
Thank you. I'm gonna ask my colleague Gabe to follow up.
Thanks, Campbell. And just following on that last statement, Fred, in terms of how you rank, your exploration targets, how do you do that in terms of priority, and what sort of characteristics and data help you decide which ones, get the dollars first?
Yeah, I think it's a matter of understanding what the characteristics of your mineralization are. So again, depending on where you are in the system, the characteristics will be slightly different. So for sure, we know that we need sulfides. We need anywhere from 0.5% to typically 2%, sometimes more. So essentially what that means is that where you'll have gold, you are expected to have a chargeability anomaly. It may be weak, as in the Northeast IP target, but there should be a chargeability target there. So essentially with the geophysics that we do, and we do fairly deep types of surveys that can see to at least 300 meters, essentially what we're doing is mapping out the distribution of sulfides in 3 dimensions. So that's important. Structural concepts are important. Like for instance, the Northeast IP target, we had geology, we had geophysics, we had geochem, but we also had the structural context in the sense that the rock types there, the tectonic environment is very, very similar to Vesa further to the east. And then another example could be, well, Eagle Telbel, depending on how you interpret that, whether it's like a VMS type target that's synvolcanic, so controlled by the package of rocks within it's found, or whether it's structurally controlled, makes a big difference in terms of where you look for these. So for us, we view Eagle Telbel as being more of a structurally controlled environment. Therefore, we can look for Eagle Telbel style deposits elsewhere, notably on Douay. So the P8 target, for instance, which has combined chargeability and conductivity, they're just 2 different geophysical methods. Those characteristics are quite different from the rest of the Douay deposit, but they are more similar to the geophysical characteristics of Eagle Telbel. So, it's a combination of geophysical information, structural interpretation, and of course, compilation of a considerable amount of past geoscience data.
And have you ranked those targets yet for drilling, and when can we expect, and you know, what is that rank, and when can we expect those to be drilled?
So essentially what we have at this point in time, obviously the Northeast IP target is ranked quite high, P8 target is ranked quite high, and that's why we're drilling them now. We've also submitted something like 60 sites to the ministry for permitting, and that has already been discussed with Agnico. We agreed that these were all high priority sites. So basically, as an example of how this works, we can come up with a list of 130 targets. We rank them internally, like within Maple Gold, and that's me and our senior geologist in 3D, going through hole by hole, looking at what it looks like in 3D. Then we send our ranking over to Agnico. We discuss it with them, and the holes that we both are in agreement are priority one. Those, of course, get the nod for the next drill campaign, because you know we're not going to be drilling 50,000 meters in the next drill campaign. But as you know, like it's not always your priority one hole that is going to hit. So you have to be a little bit flexible and follow your hunches a little bit. There's a lot of historical evidence in a number of different deposits where, you know, people's priority 3 target have actually ended up being the discovery hole.
Sure. Just my last question is in terms of like the metallurgical characteristics of the different zones. Can you comment on that?
Yeah, so there's been a fair amount of initial metallurgical studies done over the years since 1995 onwards. The most recent study was 2017. It covers all of the currently known zones and provides for, you know, a representative range of assays between about 0.8 and 4 grams per ton. That metallurgical work, with the exception of the very small northwest zone, gave recoveries between high 80s, low 90%. Whether you did bulk leaching or whether you did gravitational recovery followed by leaching of a flotation con. So the gravitational recovery was around 26%, and if you did leaching of a flotation con combined with gravity, you would get 92%, but bulk leaching already gave you high 80s. There's a little bit of gold deportment work that's been done, for instance, in the Douay West area. That shows that gold's fairly fine grained. It's free gold in the sense that it's found in fractures in the gang, found in fractures in pyrite, not occluded, no complications, no deleterious elements, no real red flags. The rock can be a little bit hard in areas where you have more syenite. The basalts are quite soft. So depending on where you are, the characteristics are going to be slightly different. But at this point in time, with the preliminary metallurgical work that we have, there are no red flags and it looks quite good.
Perfect. Thank you. Artie?
I want to ask about the resource update. Since you guys are like drilling, are you guys gonna wait to receive the results from some critical targets, or like it's an ongoing process? You don't mind if you still wait for some results and work for an updated resource estimate?
Normally what we do is we have to have a certain critical mass of drill holes that have been drilled within the resource area, so infill type holes. So right now the drilling that's pending to be included in a resource estimation includes the drilling that was done this winter, which in the end was 4,300 or 4,400 meters. The drilling we'll be doing this fall, although much of that is still discovery drilling outside the resource area, and the drilling we'll be doing in the winter, which will be a mix. So I think with Agnico Eagle, we now have the ability to kind of internal resource estimation update, get a feel for what the significance of that may be, depending again on what the number of drill holes are that have been drilled within the resource area. So it's, as you say, likely to be an ongoing process, and it will help us guide also our drilling. And of course, if we have you know, a major intercept at P8 or Northeast IP, then suddenly those kilometric targets are going to be the focus of much drilling, and they can end up adding significantly to the resource base going forward. So.
Thank you so much. Campbell?
Sure. What is the depth of the overburden?
It varies quite a lot. Like in the Porphy Zone, for instance, we do have outcrop, and we have drilled holes where the overburden was as thin as 6 meters down hole, so probably like 5-ish vertical. And I would say the average is about 25 to 40 meters, but quite variable. And it's thickest in the 531 zone area where it can get over 75 meters.
How costly will it how costly will it be to remove?
How costly would it be to remove?
Yeah.
So, Well, I'm a geologist, not an engineer, so I don't really have those numbers at the tip of my fingers, but for sure there would be a cost associated with that. And that, of course, will have to be balanced by size, grade, and other economic characteristics of the deposit.
Okay. Can you explain the importance of the Jutel district?
Yes, I think it's always important when you're in the shadow of a head frame and you understand that the exploration potential has not been fully exhausted, if you wish. Like, you have to keep in mind that the Eagle Belt deposits were put in production at a time when people were planning with $40 gold, and were exploited during a time period where the gold was between 180 and about $360 per ounce. And so what that means is that they were using fairly high cutoffs of about 6 grams per ton for both the underground and actually the open pit deposit there. And so using cutoffs that would be more consistent with today's parameters and gold grade, you can imagine that there would be additional resources, not only near surface, but also at depth. So the exploration potential there is significant, and not to mention the eastern half of the deposit, where surprisingly the drill spacing is actually quite broad. So, you know, again, these deposits do not have big footprints, and if you have a 500-meter interval, of which there's several with no drilling, you have potential to make a discovery there. So, and the other thing too, of course, is the geophysics that were done there in the past. The IP that we used to do, like when I started my career, we would see down to maybe 200 meters. We do N1 to 6. Nowadays, we do N1 to 20 or N1 to 30, and we can see down to 300, 400, 500 meters depth. That's it's kind of uncharted territory in a sense.
Okay, and I think one last question. There are a lot of historic mines in the Larder Lake region, e.g. McGarry Mine, Omega Mine, etc. Are you looking to add more historic mines?
I think you mean with regard to future focus, acquisition focus, or what exactly is the question?
That's what it seems like, but it's one that was just sent in.
Yeah, I think for sure, looking at our experience with Douay, we're clearly seeing that although it has been discovered in 1976, we found a new zone called the Nika Zone in 2018. We're getting a number of intercepts that are, you know, among the tops ever on the property. We think the exploration potential is outstanding. We can see in deposits like Malartic that they're also making discoveries like 80 years after production first began. And I've had experience with discovery elsewhere in the Americas, where it's the same situation where early drilling, perhaps a little bit of initial production at shallow depths, and then somebody has the guts to drill a little bit deeper and suddenly you have a new deposit. So for sure, underexplored historic producers are certainly targets of interest, no doubt about it.
Yep. Thank you. So we're going to sort of wrap up, and I'll pass it to Matt for a closing statement, and
Sure.
maybe build into that again some further rationalization for the BMO deal. Someone said, well, why not do it at a higher share price, say after updated drill results, and then, you know, we'll close.
Of course, and thank you all for attending today. I know it went a little bit over. You know, we, as I mentioned earlier, we think very carefully about how we play things out and what the future holds. You know, we have all the drilling ahead of us. We expect great things from our drill programs. Although one fantastic drill hole could change our lives, it's not necessarily going to happen at any time soon, and we have labs that are holding us up. So when the markets are open and you have a use of the proceeds, it's better to take advantage of that and not miss the opportunity if it's presented to you on reasonable terms. And, you know, we took this into account. We thought about all the parameters. We looked at the dilutive effect to our shareholders. We think about these things. Of course, we're all shareholders ourselves. And it is a 10% dilution, not larger. There were no warrants. As I've said before, I've never done a warrant financing since I've been in charge, except for with Agnico, but that's different. That's a strategic investment. So, and there's no broker warrants paid to the BMO group. So I think from a cost benefit analysis, we look very carefully at everything. Yes, we expect to have great things from our drill results going forward. Unfortunately, we can't push the labs fast enough. And, you know, if gold comes off further, we'll be in a very cash rich position to be opportunistic. I mean, it's terrible if you don't have an incredibly strong balance sheet and you see great opportunities and you can't act on them. So we can now we're in a position to do that. And as I said earlier, we have some very near-term ideas that we're looking at in the Abitibi Greenstone Belt and in other greenstone belts within Canada. And I just ask that you trust that we know what we're doing, and we're doing it. We did it for a reason, and we did it at this time for a reason.
Thank you very much. Thank you everyone for tuning in. Please share your feedback when you get the queue for that, and you can respond with further questions or things you want to get to management, or they can contact Maple directly, who would be a great first responsive contact.
Surely Anthony, Anthony@maplegoldmines.com.
Excellent. Thank you. You can follow Maple Gold and Amvest Capital on the usual social media channels. And thank you very much.
Campbell, thank you. Erdi, Gabe, Fred, thank you all for listening.
All right.
Thank you. All the best.